Well, good morning, everyone. Thomas Montgomery here. It's a beautiful New Year's Eve, isn't it? It's December 31st, 2025. We get together most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories. On my shared screen, you'll see our nonprofit website in the background, 509pacific.org. Quite a few resources there that, if you're not familiar with, you may want to become familiar with. Our agenda topic today is a really important one at really two different levels, but we'll conclude with seeing if you agree with that. Our topic today is talking about best ways to handle objections by prospects. But let's do a little housekeeping, a little background first before we dig into that. So again, we have 509pacific.org shown here in the background. We have a tech support line. We put most of our past trainings up on YouTube, which you can access. As a 501c3, we're mission based. Our nonprofit organization has received a grant, and we have three mandates, three things that we're supposed to be doing that we focus on doing each day. And that number one is to help improve financial literacy. I don't believe that a lot of our target market really cares about that, but I think many people need to know it. I think you all are different than average people. You understand that there's a formula for funding. You understand how it works. And if people, it's like a recipe, right? If you had the ingredients and the recipe to make chocolate chip cookies, would it be too good to be true that you could make chocolate chip cookies? No. Well, you and I know that there's a formula for funding and we provide people the ingredients, and that's why it works. But not everyone understands what you and I do, so education's important. We give away free shelf corps, and that's in the middle of the page here of 509 Pacific. And ultimately, the goal is to get money into the hands of entrepreneurs so they have the money to start or grow a business. But as it ties to our agenda here in just a moment, we're not the bank, right? So I never want you to think we're the bank. We're not the bank. In the financial ecosystem, what you and I do, we're considered technical advisors. It's the role that helps clients, helps entrepreneurs, helps small business owners qualify for funding legally and ethically. So, in other words, we're providing them the recipe and the ingredients. So with that being said, let's talk a little bit about a two-step process to be able to handle when you have objections from prospects. Now, to put it in perspective, we ask each of you, we invite each of you to be an affiliate. Costs nothing to be an affiliate. If you're not, come over to 509pacific.org down here at the near the bottom. You can click, you can become an affiliate for free. You don't have to pay anything now and pay anything later. You get a landing page you refer people to. You make 5%, 5 points of each client's capital raise. Everyone's guaranteed at least 100,000, so you know you're going to make at least 5,000. A lot of people want more and get more, so you get more. But the bottom line, as an affiliate, while we spend time and energy training you, it's not your burden to go explain everything. And we consistently see our referral partners, the more they talk, the less money they make because they're putting themselves in the middle of a discussion or a transaction. And it's not that we're not being transparent. It's just, we do this full time and we have years of experience and most of us came from the SBA. We can't just package all that knowledge into these quick Zoom morning sessions. So if you'll follow the pattern, the role of being an affiliate, you really take almost all the burden off. All you're simply doing is asking people if they'd like to get a free funding proposal. But nonetheless, some of you insist on playing an active role of interfacing with the client once they're engaged. And I think it's a mistake, but you're an adult, so you can do what you want to do. So let's go ahead and talk about how to handle some of the objections that you might face. It's incredibly important that we don't misrepresent what we do. So, what is it that we do together? If you're an affiliate, if you're a distribution partner, we're working together, at least on this project. We help create fundable businesses. It goes back to that formula analogy. We provide the recipe and we provide the ingredients so they can have a fundable business. That's what we do. And we've had lots of trainings recently where we went into a lot of in-depth discussions, and you can see those on our YouTube channel if you've missed any of the recent trainings. So when it comes to the formula for funding, we've covered this previously. The formula for funding is E plus the three C's equals a fundable business. So if a client or prospective client or prospective participant already has the formula and they have the ingredients, they don't need us. And that's okay because I don't think there's any business in the world that everybody needs. So, with that being said, it's important to understand the formula for your own knowledge and how we help provide the ingredients. But it's okay that if a client says, hey, I don't need your help, then essentially they can just go right to the bank if they already have a fundable business. And that's okay. That's not bad. It's just not, I don't think any of us are going to find some solution to a problem that everyone has. Now, most entrepreneurs want money and they need money, and very few of them have a fundable business. So the great news is 9 out of 10 of these folks need you and I. But sometimes they come off with a little bit of an edge. And if they come off with an edge, the simple answer is, hey, if you don't need help, just go to the bank. And we'll get more to that in a moment. We'll even give you contact information that you can give them so they can go bypass us if they feel that they already have the formula and the ingredients. But let's dig a little deeper into that. So when we talk about the formula for funding, E equals that business entity. So if someone's wanting business funding, then they need to have a fundable business. And so that includes having an entity that's been formed, that's in good standing at both the state and federal levels. Of course, it needs to be in the client's name, it needs to be their business. They're going to need a written business plan that describes who they are, what they do, what they want money for, and how that will help them grow. They're going to need financial projections. And I'm giving you general truths. So could you prove me wrong that there's some lender out there that only wants 24 months instead of 36 months projection? Sure. But in general, uh, these are the things that are needed to have a fundable business. We need to have the entity, business plan, and then we were on number three. Most lenders, not all, but most lenders are going to want financial projections looking forward about 36 months. And they're going to typically want the business to be set up properly where it is domiciled. It's based with a true, unique commercial address. Now, that doesn't mean that the operations of the business couldn't be done elsewhere, but we need to have a business that's set up properly. So these elements are incredibly important to kind of our starting point, even before we get to the three C's, which is next. So if someone already has a business entity that has these elements, that's great. That's a great start. They have part of the formula for funding. And so we shouldn't debate or fight with them or dispute over if they have that, that's great. If they don't have it, then you and I can help them with a free shelf quote, which is right here in the middle of the page of 509 Pacific. So we're not about selling people or getting people to do things that they don't want or need. But the problem is it comes back to financial literacy. You're going to deal with a lot of people that don't know what you know. Sometimes they're not very analytical thinkers. They're more emotional. And so it's just like, no, I just want funding, just want funding. Well, if you want business funding, you need to qualify. If you want chocolate chip cookies, you need a recipe and you need the ingredients. So this describes the E, pretty straightforward. Some people will already have it. If so, that's great. If not, then we can get them into a free shelf corp and provide that to them in 7 days or less. So is that all that it takes to go out and get business funding? No, that's part of the formula, right? Because we said it's E plus the three C's. So now let's get over to the three C's. So the three C's, as we've covered many times before, includes credit. Credit, there's two aspects of credit. There's business credit, which is our primary focus, and then there's personal credit, the credit of any owner that owns 20% or more of the business. So when we're talking about making chocolate chip cookies and we say, well, you're going to need chocolate chips, when we talk about the formula for funding and you need credit, we're not just going to tell them, hey, you need credit. What we do is we legally and ethically help them have credit worthiness. So, how do we do that? Well, we're going to help them add trade lines under the business, under the EIN, so they have a strong D&B, Dun and Bradstreet profile, strong Paydex score. So, we're not just telling them, we're actually helping them do that. And then if their personal credit has imperfections for free at no charge through the program, we can help them improve their personal credit. So credit has two subcomponents, and many people, but not all, need help with this, and that's part of our value proposition. Makes sense. We're showing them what the formula is, and we're helping them have the ingredients. So that's the first C. Pretty straightforward. And I think most people are pretty familiar with the first C. I think as we go into the second and third C's, that's where people are less clear on, but frankly, it's where they need us, you and I, even more. Let's move on to the second C. So the second C is collateral. And again, we've had multiple trainings talking about the three C's, and you can see that up on our YouTube channel. But collateral, in short, are the assets that the borrower is willing to pledge to the lender, that if the borrower should not repay the loan to the lender, that the lender can use to mitigate the risk. So it's collateral, it's what's put up. A lot of these people aren't like you and like me. A lot of these people, they don't have collateral. Maybe they have credit, maybe they don't have credit worthiness, but we can help them with that. So that's not a problem. But more than that, a lot of them don't have collateral. So what happens? We can fix that. We can literally provide them collateral so we resolve what's called the collateral shortfall so they qualify for this third C. So if they don't have chocolate chips, we can provide them chocolate chips. So you can start to see what your and my role is. We're not the bank. We're not the bank. Sometimes people get confused. They think we're the bank. No, we're not the bank. We're going to end up going to the bank, and we're going to talk about specifics here in a minute about banks we work with and even give you their contact numbers. Just call them and work with them directly if you want. But the point is, most of these people, they don't have the ingredients. So it's not, I would argue that the problem that most of these people have is not that they need money, need money. They need to have a fundable business. Because once you have a fundable business, getting the money is not really that difficult. But if you don't have a fundable business, it's almost impossible. So we're filling that gap. We're solving that problem. If you have any questions, comments, concerns, type it in. So let's get on to the third C, capacity. And so this is another aspect that fewer people understand. It's more of a high level concept. So we need credit worthiness, which reflects that we've paid our bills in the past, both at the business and personal level. We need collateral to protect the lender. And I know maybe we don't care about the lender, but the lender cares about themselves and they're the ones loaning the money. And then capacity is the demonstration of cash flow, that we're going to have enough money, the borrower will have enough money to pay the debt back. Because guess what? The lender would really, really, really like to be paid back. It's of utmost importance. They want to be paid back. They don't want defaulted loans. Now, when we get into capacity, it's a little bit more complicated because here we can have historical cash flow, historical financials, what's happened in the past, and or we could have future projections. So what we do as far as not only letting people know, hey, you need capacity, is we help them fix this so they qualify. We're providing them the ingredients as well as the recipe. So we can certainly help them put together their financial statements that are historical. We can put together financial projections that are forward looking. We can liquidate the AR, which is that collateral that we provide them to improve their cash flow. And we also have the opportunity fund to be able to help them have daily deposits to have stronger capacity. So again, my goal is not to go so deep into the woods that you get lost, but it's to understand our role in this. So if you can't, if you're one of our affiliates and you came across a client and they said, "Oh, no, I've already got an entity that meets all these criteria. And yeah, I've got all the three C's. My business credit's great. My personal credit's great. I got plenty of collateral. My cash flow is just fine. I've got my projections put together." They may not need us, and that's okay. But I think that's probably going to be about 1 out of 10, maybe 1 out of 50, maybe 1 out of 100. So most people need our help. But a lot of times, if they don't understand this value proposition, they're judging us on the wrong equation because we're not the bank. We're not the bank. We're getting these people qualified legally and ethically so they can be funded by the bank. So continuing on, let's go to the second step. So the first step was making sure that you and they, we all understand our role, right? We're providing the recipe and the ingredients regarding the formula for funding, but we're not the bank. We're not the bank. We're not the bank. So, and frankly, the world doesn't need another bank. If you drive around or go online, there's plenty of banks and credit unions and alternative lenders. The problem is, and they want to loan money, but the problem is most of the people that go to them aren't qualified. Thus, they need us first. All right, so step two is if you run into someone that is just not willing, to participate. So again, as an affiliate, what's your pitch? What's your call to action? Hey, get a free funding proposal. If they're not willing to do that and you've educated them to make sure they understand what our proposition is, then say, hey, you know what? You could go ahead and just go right to the bank. If you feel like that you already have your solution to your problem, you shouldn't be talking to us. You should be talking to the bank. So, with that being said, I wanted to provide some bank contacts that they could get in contact with. And I forget who it was. I think it was Doug, but one of you I was talking to yesterday, and one of you had a client that's like, well, I'm not sure that banks really loan money. I need a reference from Bank of America that Bank of America really loans money. I'm not sure that Wells Fargo really loans money. Well, that's insanity, but fine. So you can invite any of your unsold prospects to reach out to Seth. Seth is a high-level banker at Bank of America, and his phone number 800-432-1000. So what would you ask Seth? Hey, Seth, does Bank of America really loan money? And then you could ask Seth also, what does it take to get funding? Because what Seth's going to tell you, maybe not using the same words, is this formula, right? Because this is the universal formula. Now, certainly there are some lenders that have some different underwriting criteria, but this is truth, right? No one can dispute the formula for funding. Again, understanding there are some outlier lenders, but we need to have a good business entity and we have to have at least one of the three C's. Now, the truth is, if you have just credit, but not the other two, there are some financing options. If you have collateral, but not the other two, there are some options. And if you have just capacity, but not the other two, there are some options. But for traditional, normal business loans, it is all three C's. Don't believe me? You're a conspiracy theorist? Ask Seth at Bank of America. Well, I need to talk to someone else. Seth's not good enough just because he makes what, a little over $1 million a year at Bank of America lending money. He's not credible. Okay, then call Andrew. Andrew is the global head of asset-based lending with JP Morgan Chase Bank. commonly referred to as Chase Bank. Give him a call and say, hey, can you tell me if this is true, that there's some formula for funding that I need to be able to qualify to get a business loan? Ask Seth, ask Andrew, contact David over at Goldman Sachs. Now, David, you're not going to be able to reach directly. You'll have to call Tony first, and this is Tony's number, but then Tony can get you in contact with David. Or just contact any bank. So we're not the bank. We're not the lender. We are the technical advisors. We help, and which is consistent with our pitch, which is consistent with our agreements. We help entrepreneurs legally and ethically have a fundable business so they can go get funding from Bank of America. That shouldn't be America. So they can get funding from Bank of America or JP Morgan Chase or Goldman Sachs or many, many other lenders. So understanding our role is crucially important. And then second, if you're getting pushback from someone, you don't need to battle with them. Just say, hey, if you feel like you already have what you need, then just go get funding, go apply. What I would encourage you to do is to set up a reminder and follow up with them in a couple of days, because chances are they're going to come back to you with their tail between their legs, because what they're going to find out is exactly what you and I told them. Hey, dude, you need to have a fundable business. And there are certain elements that are needed, and most people don't have those elements, and that's where we come into play. So who has questions, comments, concerns about what we covered today, which are essentially summarized as two strategies, maybe more than two steps, two strategies to deal with prospects? Because if you're an affiliate, what are you asking people to do? Hey, would you like to get a free funding proposal? I mean, it's a crazy simple proposition. Well, what does that mean? Well, there's no minimums, credit scores. Everyone gets at least one offer. There's no upfront cost. There's no hard inquiries to get offers. No, you don't even have to have a current business. If you have a current business, startups can qualify, or you can have no business at all. We can provide you a business if you need through the Shelf Corps. We can get you 100, 200, 250,000 or more. We'll just have to see what you qualify for through the first tranche. You'll get offers. You pick the ones that you want. You don't have to take those that you don't. And if personal credit's not so good, don't worry. That's one of the resources that's built in through the grant. That's your value proposition. And if you frankly go to your landing page, everyone should have a landing page that looks like fundingproposal.org. So when you become an affiliate, you will get a landing page. So to become an affiliate, it's here. And then you fill out the form, no cost. We'll send you an onboarding. You'll start with a temporary landing page. And then once you've submitted your first deal, get your first commission check, then we'll build out one that's dedicated to you. All right. Cameron asked about PGs. So let me bring back up my notes. So PG means personal guarantor. So some types of funding do require a PG, and some of them don't. So that's what you'll have to be really strong about. First of all, I guess I would say as an affiliate, and no offense, Cameron's a very, very smart person, but as an affiliate, you probably don't want to be answering a lot of questions, because again, our history, our experiences, the more you talk, the less money you're going to make. It's not your role. We have attorneys and paralegals that are experienced, and we're licensed, we're bonded, we're insured. So if we don't say the right things or don't do the right things, we're covered. You're not. So as an affiliate, I don't mind the question, Cameron, of course, but I don't think it's your role to go advise people. But the question was, is there a PG, a personal guarantor, needed? And the answer is it depends. Different types of lending, different types of loan programs have different underwriting. So I'm giving you the general guidelines that are true for normal business loans. Need all three C's, but as I had disclosed, there are some exceptions. So back to Cameron's question, is a PG, is a personal guarantee needed? It depends. For some types of funding, yes. For some types, no. And frankly, we ask the client, is that something that you want to do or not do? And if they say, no, I don't want to have to stand behind my business. I don't want to be responsible for the decisions my business makes, then we will focus on funding solutions that do not have a PG. But many answers to many questions that you or prospective or clients could ask, often the answer is it depends. It varies. The answer might be different at Bank of America than it would be at JP Morgan Chase. It doesn't mean that we're being elusive or a lack of transparency. It's just there's not one bank, there's not one lender, and there's not one type of loan program. So the answer varies. So when you have clients or prospective clients that come back and challenge you, in summary, remember, as an affiliate, your role is simply to help them get a free funding proposal to come through the portal. And then our attorneys, our legal team takes it from there. You're really not empowered. You're not trained. You're not licensed. You're not insured. You're not bonded. Once you get them in, if you're continuing talking to them about the process, I mean, you can do what you want. You're an adult, but I think you're putting yourself at risk. And most likely, the more you talk to them, the less money you'll make because you'll work yourself out of the deal. But that's your choice. And I know a lot of you you're too proud. Some of you are too smart and too proud to say, I cannot just be just an affiliate. Well, we're opening, and we've talked about this for over a year, we're opening branch offices across the country. But it does require you to come in and sit in on a full day certification training because we need to make sure that anyone that's going to communicate to the clients does it correctly. And again, what we're training on the morning Zooms is useful, it's interesting, it's relevant, but it's in little snippets, and we're not assessing your learning. We're not conducting a test afterwards. So if you stick in your lane, stay in your lane, get people in, but don't continue to service the client because it invariably causes conflict. Because now they're talking to you, they're not talking to our legal team. And so you become a middleman. And sure enough, there can be inadvertent inaccuracies that you state, and then they get mad. So again, the affiliate role we've evolved to make it really simple. Refer, it doesn't cost you anything. Refer people in, make 5 points. And if you look around, 5 points of these clients' capital raise is significant. All right, who else has questions, comments, concerns on what we've covered today? All right, and Christopher brings up a good point. So if someone wants proof of funding, they need to go to the bank because we are not the lenders. So if someone says, well, I need to talk to 5 clients that have at least reached $1 million capital raise, that is a conversation that they need to have with Seth, with Andrew, with David, by going through Tony or their local banks. We are not the lender. Now, should we be held accountable for what we promised to do? Absolutely. We're going to provide a business entity if they need it. That comes here in the middle with the free shelf corp. We promise to help them build their credit, personal, business, and personal. We promise to provide them collateral if they need it. We promise to help them build capacity if they need it. So these are the things that we do, and these are the ingredients needed to get funding. But we are not the lender. We are not the lender. We have never lent anyone any money because we're not the bank. These are the banks. So help people understand, if you need to go talk to the bank, talk to the bank. We, you, and us by extension, we're the technical advisors. This is our role. And if you can help people understand that, it'll go a lot smoother. Any other questions, comments, concerns today? I know we're at the bottom of the hour. Tomorrow's New Year's Day, so we won't be back tomorrow, and then we will be back on Friday. Any other questions that anyone has that I can help you with? As far as anyone needing to reach out to us, yes. So our phone number is on here. There's no secret. So when you go to 509pacific.org, you have our phone number. So I don't want you to think you can't reach us. All right, thanks everyone. We'll see you back on Friday. Have a great day, and let's have a very, very successful start to 2026 together. Bye bye.